Ladies and gentlemen, good day and welcome to the Tata Chemicals Q3 FY20 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Disa, CDR India. Thank you, and over to you, sir.
Thank you. Good day, everyone, and thank you for joining us on Tata Chemicals Q3 and 9-month FY20 earnings conference call. We have with us today Mr. Mukundan, Managing Director, Mr. Zarir Langrana, Executive Director, and Mr. John Mulhall, Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussions may be forward-looking in nature and may involve risks and uncertainties. I now request Mr. Mukundan to begin proceedings with the call.
Thank you, Gavin, and thank you everyone for joining our Q3 9-month ended earnings conference call. As already informed by Gavin, I have with me Zarir Langrana, our Executive Director, and John Mulhall, our CFO. I will begin by highlighting some key operational developments, post which John will summarize the financial performance for the quarter. During the quarter, we are happy to report two major events which happened, both positive, and first one was the acquisition of balance 25% stake in Tata Chemicals Soda Ash Partners in North America from our partnership firm for $195 million. The second one was that we have now the NCLT approval for demerger of consumer business and merger with TGBL or TCPL, the recent TTQQY. Details of the same will be discussed and elaborated during the call. On the operational performance, we've had again a set of resilient performance all across, and except for Tata Chemicals Magadi in Kenya, where we had operational challenges. I'll come to that in a minute. In terms of the basic chemistry products India operations, the revenues were almost slightly lower, tad lower, but the margins for the quarter improved, and on the base of improved efficiencies and lower input costs, which had led to better performance at the bottom line. On the international business, as I highlighted, we have already acquired the 25%. We are now 100% owners of the U.S. operations. On the operational front, TCNA had a steady quarter. Some pressure was in the market for the first time, but I think these seem to be one-offs as we move forward. TC also delivered a good number on account of better product mix, sales between the manufacturer and purchase for resale. Most important point I just wanted to draw your attention is to Tata Chemicals Magadi, where there has been a softness in performance due to lower sales volume, and these are being addressed during the quarter. Their production has been steady. However, the reach to market was beset with certain operational issues which have since been rectified. Overall, I would say basic chemistry products has held a steady performance during the quarter. As far as the specialty business is concerned, starting off with nutraceutical, the performance in the quarter was on expected line with revenues of 18 crore in the quarter. Nellore facility in the last stage of commissioning and customer approvals on the way, and we expect the same to be available by Q4 of this year. Moving on to silica business, we are on track with the commercial production, and we are in the early stages of getting the customer approvals for commercial delivery of these products to tire customers. And this is largely a domestic-based product and will add significant value to specialty business. Rallis performed well. The revenue grew 28%, and company continues to invest in new product launches. As far as the specialty business, which is the energy business, we have been allotted the land by Government of Gujarat, and we are beginning early project work there in terms of the filling up of the land filling and other activities which are pre-project work are commencing soon, and we are also in continuous dialogue with potential partners. We'll be making a formal announcement as soon as we have made significant progress on the same. In terms of the capital investment, which is one of the key drivers of future growth, the capex in Midapur expansion is on its way and it's proceeding well on schedule. We have This year committed approximately 800 odd crores, and overall we are investing 2,600 crores in the Mithapur site. Parallelly, as I said, the specialty business has a similar number of investment, of which you would see continued investment in Rallis. Investments have been made already in nutraceutical and in the silica business, and very soon the investment in the energy business will also start. So these are investment-led growth opportunities which continue to drive future bottom line of the company. In terms of consumer business, as I mentioned, the NCLT has approved the demerger of the business into TCPL, and as a consequence of this, the financials have been demarcated as continuing and discontinued business. We expect the transition of business to close before March 2020. So in itself, the continuing business as reported in the SEBI balance sheet, reports are comparable. What is not comparable is the full company business, which included both continuing and discontinuing business, and it's very critical to draw that attention. I'll also ask John to bring that out very, very clearly. Within consumer business, salt maintained a steady momentum in terms of higher volumes. Pulses and spices also grew by 22% in the days of higher volume and good track record. We expect this piece of demerger and merger into TGPL to conclude during the current quarter. With this, I'd like to invite John for his comments.
Okay. Thanks, Mukundan, and good evening, everyone. Before we open up to questions, I'd like to just highlight a few key points from our Q3 FY20 results that we released earlier on this afternoon. And most importantly, you'll note from the presentation of the accounts that we are showing the performance of the soon-to-be demerged consumer products business unit as discontinued operations. And Mukundan said we hope to have the demerger completed this quarter, following the receipt of the NCLT order at the end of January. In the standalone results from the PAT from continuing operations, you see is up 61 crores, but you also note that the revenue is flat against the same period last year. The major areas of change in the performance, really, we've seen an increase in other income of 23 crores. That's really down to two things. One is where we had an FX expense last year related to the bioenergy preference shares. This quarter we had a small 6 crore gain. Offsetting that were reduced income from cash and our mutual fund investments, which cost us about 27 crores. We saw a reduction in finance cost of 16 crores, and this really reflects the ECB loan that we repaid in mid-October. And operationally, we benefited from a really continued focus on fixed costs, both factory and corporate, and variable cost management to offset the soda ash and sodium bicarbonate price reductions we notified in November last year. This effort contributed about 30 crores of favorability to this period last year. Our India cash position reduced from 2,739 crores in September to 2,428 crores in December. This reduction of 311 crores reflects the repayment of the ECB loan, with capital spending in the quarter being 140 crores, being more than supported by the cash generated by business operations. Operationally, the India business performed better than last year, while soda ash volumes were down slightly. Net contributions were sustained through reduced energy costs across all product lines and supported by fixed cost efforts as well. On the discontinued operation, being the consumer products business unit, it recorded a 13% increase in revenue over last year. Salt, pulses and spices all recorded increased revenue, though salt was the largest with volumes up 17,000 crores at 70,000 tons at 275,000 tons in the quarter, continuing above last year run rate from quarter two as well. And net profits are up on last year, reflecting both increased volume and benefits from reduced energy and cost control. Briefly looking at our international operations for North America, the highlight was naturally the completion of the transaction where Valley Holdings purchased the remaining 25% share in Tata Chemical Soda Ash Partners Holdings on the 19th of December, and this brings TCSAP entirely within the TCL group. Production of soda ash in North America was up 20,000 tons over last year, so about 4%, with a year-to-date production around 3% better than the same period last year. The company did reduce its Corona stockpile, which is natural around this time of year, by about 180,000 tons. So you'll see a destocking effect coming through on the profit and loss account through the year. Overall, the profit for the quarter was on par with last year, though we are ahead on a year-to-date basis. In Tata Chemicals Magadi, sales volumes were lower than last year due really to weather and some production-related issues in the region, delaying the evacuation of product from the site in December. While this impacted the quarter adversely, year-to-date production is only 3% down on last year's total. And while sales are down about 14% on the year-to-date basis, the effect of increased prices and robust cost control mean that we're ahead of PBT on a year-to-date basis against last year. And Tata Chemicals Europe, which represents the soda ash, sodium bicarbonate and energy business units, soda ash production was about 11% ahead of this time last year and 4% on a year-to-date basis. Overall sales were reduced, but this is due to the planned reduction of low-margin purchased for resale product. We sold about 2,000 tons in the quarter against 16,000 tons last year. There's very little margin made in this product, so that reduction in volume did not affect the business adversely. The company booked an insurance settlement of 6 crore in the quarter relating to a fire in Wellington in 2018, compared to a net 8 crore non-recurring expense last year, which is made up of both an insurance claim of 20 crores receipt and a pension expense of 28 crores recorded in December 2018. British salt volumes were flat to last year, but reduced gas prices did provide some upside and an improved performance over the same period last year. With that, I would like to open the lines up to any questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Kasaria from Securities Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a good numbers in such a challenging environment. Just have 3 questions. First is on the consumer demerger. So the record date, is it going to be before March? And is there anything else left? Or, if you could just provide some update on that.
So I can only say that we will be working our way through and announcing it shortly. I think the legal teams, the secretarial and legal teams are going through this in detail. We do have to call a board meeting to clear up all the documentation and everything. I think that's going to be done shortly. So we are working to making sure that this happens certainly in this quarter, but certainly somewhere, if not possible, I would say that somewhere around Feb-March time period. That's where we are looking at. But we have all the approvals in place, but we're working through the filings to make sure that we can announce the date.
Understood. Okay. Second question is on the soda ash business, both India and US. So if I talk about the India business, what we understand, the market currently is in an oversupply situation. You have an inventory overhang, and part of the extended capacity with the new supply will further come in 2020. So despite that, if we look at our spreads, we're still kind of able to hold up, our overall operating spreads in the business. And at the same time in US, what I understand, we took around $15 price increase in September. But there we have not really seen that translating into the operating spread. So just trying to understand how should one look at spreads and volume, for next 1 or 2 years in the soda ash business.
So I think the broad issue here is what you're seeing as an inventory overhang is a bit of additional capacity which has come through a little earlier out of Turkey. That's really what has happened on a strategic frame. We haven't yet assessed the supply chain knock-on impacts of the Chinese coronavirus. That is not clear to us, but I think we are making an assessment. So those are two broad points. It's not related to the Indian situation. It is more the international situation which is pushing back into Indian market in a temporary basis. Other than that, we have no view. In terms of the operational benefits in India, as I mentioned, that the main benefit we are getting is as the market prices have come down in line with, I would say, the energy costs having come down. It's more maintenance of margin which has happened or slight expansion of margin. Similar thing would play out in US. But certainly we are happy to clarify about this $15 difference, which we are not sure. Zari, you want to weigh in on this?
So $15 was the announced price increase sometime in the month of September, October, like we normally do. But obviously, contracts may not allow, or negotiations may not allow for the full 15. So the price increase taken in North America would be somewhat short of the $15.
Okay, the reason I ask is, if you look at the energy and the key raw material, the prices has been trending on a downward side, right? So one would typically see some benefit flowing in terms of operating profit, but that has not really materialized. So hence the question.
No. So in North America, I think, energy costs have been fairly stable or flat throughout the year. Where we have seen the impacts of favorable energy costs have been really in India and to some extent in Kenya.
Okay. Last question was on the soda ash purchase we made. So, that translates into somewhere around $800 million as the fair value for the US business. Now, if I look at our overall net worth which we have in Tata Chemicals X, the consumer business is around 12,500-13,000 crores. Now we have the US business and then, the value of group investments, Indomorac and then the Rallis included. So I'm just trying to understand, the business is probably trading at, the adjusted price is probably trading at a significant discount to what even the bookwork, the net worth is. So how should one understand the overall, monetization of, Indomorac or other group investments? Because on a cash flow basis, even after this capex, we will still be positive free cash flow. So the cash position will just keep on building up, So last 2-3 quarters, have you or the board discussed anything on this aspect in terms of,
See, Indomorac is not on the immediate discussion or horizon as far as we are concerned because the unit is doing fine. It has its own ups and downs depending on the commodity cycle, but it's one of the very fine units which we have. So it's not come under the scanner of strategic review. Certainly, I think the investments I mentioned to the extent of 2,600 odd crores, which is happening in TCL, Mithapur, and additional. If you net out in the specialty businesses what we are planning, and that may be over a longer period of time, but certainly what we are planning, approximately about 1,500 odd crores additional will also happen in TCL. Rallis will do about 900 to 1,000 odd crores investment. So we have presented our investment plans to the board. Board has approved broadly out of this. If I just add the pieces, 2,600 in Mithapur, 500 in the specialty business between Nellore and Cuddalore, and about 800 in Dholera. And there are a few more which are in the pipeline which are getting cleared as we speak. So if I put all that together, it is going to add to in excess of 3,400 crores. So we have investment plans, but you're also right that the businesses will continue to generate cash. We are actively looking on how to engage with this whole process going forward. We will come back to you. But I think in today's term, it is very important to maintain a very conservative position as far as the balance sheet is concerned. In our view, these are fairly uncertain times. We are trying our level best to funnel through this uncertain time. As I said, the Turkish capacity coming on stream is a known. Maybe that it came on a little faster than what we thought, or whereas the coronavirus is a known unknown, and we don't know how many known unknowns are out there which we haven't quantified. So we are working our way through it. All we can say is that we will ensure that at every step of the way we inform you after we take a strategic decision. Our intent is to move the ROCE up, and our intent is also to make sure that capital is deployed rightfully, and if we cannot, we should try to return that back to the shareholder.
Thank you very much.
Thank you. The next question is from the line of Abhijit Akela from IIFL. Please go ahead.
Yeah, good evening. Thanks a lot for taking my questions. Just on the U.S. business, can we expect the full impact of the $15 price increase to start showing through from the fourth quarter onwards, the March quarter?
Yeah, Abhijit, there was no $15. We said this to somebody else at the last meeting. That was just an announcement. It's subject to separate negotiation by contract, by time as well. So it was, as Zira said earlier, it was not $15 price increase.
Broadly, what's the range?
So I think the range would be somewhere in the region of about 4 to 5 for domestic, and for the export markets, it's probably a little softer. But export contracts are a mix of both quarterly and annual contracts, so you'll see that playing out over the next quarters.
And with regard to the additional stake purchase in the U.S., is it fair to interpret that we've got only this was given effect to it was effective December 19th in this quarter's financials, so it was only a 12-day impact?
That's correct, yes.
Okay. And last piece is with regard to the ramp-up of revenues from the new capacities. By when can we expect the first phase of the Mithapur project to start generating revenues? Would it be sometime during calendar 2020? Second, on the specialty chemicals piece, I think you alluded to expectation of getting customer approvals by the fourth quarter. Is that fourth quarter of this year, the March 2020 essentially? And lastly, any progress on the bicarb trials that are going on? Thank you so much.
So I think this time around, I think John has certainly shared certain additional details in terms of timeline, broadly broken up into certain quarters. If that's lying with you in terms of soda ash, salt, and caustic and cement as we see it, that should be a broad indicator of where it is going to be. With respect to the spec chem, I think the plant getting fully commissioned in the fourth quarter of this year is correct. And I think the various approvals, including the approvals by U.S. regulatory authorities, will happen after it's commissioned, because they have to come for, we have to submit our filings. After that, they may ask for a site visit and approval, or they may even do it remotely, but it's going to happen during the course of the first half of next year. So the plant would be ready, which is what I said, and I think that the approval process for different customers would take different sets of time. As far as the Indian customers are concerned and certain local Asian customers are concerned, the plant would be ready to ship in the first quarter of next year itself. That's really the timeline on the nutrition science business.
Yeah, the last piece was on sodium bicarbonate. Any update on the trials that are going on there? Thanks a lot.
Sorry, Abhijit, was it the Indian bicarbonate or the UK bicarbonate?
The India piece.
Yeah, we have our capacities coming on stream every time. I think this next set of capacity, which has been highlighted in the sheet, is September 21. I can't see any date being put out other than that.
Okay, all right.
Yeah.
Thank you so much. Yeah.
Thank you. The next question is from the line of Madhav Mada from Fidelity. Please go ahead.
My questions have been answered. Thank you, sir.
Thank you. The next question is from the line of Rohit Sinha from MK Global. Please go ahead. Rohit Sinha, your line is unmuted. Please go ahead with the question.
Hello. Sorry. Thank you for taking my question. Actually, I missed out on the Africa part. But why the revenue and sales and revenue are down, and as well as the EBITDA is in the negative side. And probably in the next question on the Europe side, since we have discontinued the trading business, is it fair to assume this kind of EBITDA margin to sustain in the future course also?
So I'm not sure about the EBITDA, but the EBIT numbers which are there in front of me and consolidated. If I look at the quarter-on-quarter, if you go to the segment results, last year same quarter was 292 crores, and this year it is 367 crores. This is the EBIT number. So broadly, the EBIT number is up. We don't do trading quarter in the chemical business because some of this is varies by season, so I generally compare quarter-on-quarter from the previous year. And if you take the trend line as far as the 9 months ended are there, EBIT number, which is from, I'm reading from the Shady Seat, it is 1,017 as of last year, and it is 1,204 as of this year. So these numbers are up. I really don't know what you were referring to. The other question, what was your question? I'm sorry.
On the Africa business, why production, sales, and EBITDA is down there?
Yeah, I think we had supply chain dislocations happening, which have been fixed. It is broadly the unit was producing to its level, but I think we had certain supply chain issues which were operational, which have been fixed after that. Really one-off issue which will happen in that site, and they should be getting back to normal in the fourth quarter.
Okay. That's it from my side.
Thank you. The next question is from the line of Ritesh Gupta from Ambit Capital. Please go ahead.
Hello. John, on the debt side, the December balance sheet kind of reflects the gross debt shown in the presentation reflects the amount that you would have paid for the TCN bit also. I mean, it's already reflected there, or it will be it's a cash flow which is getting resolved.
No, the note behind the net debt increased in the course because of that $175 million borrowing.
Okay, so that's already reflective of that, right?
Yes, it is, yeah.
And what is the capex number you're looking for in 21 and 22, if you have that in hand?
21 and 22, I think the capex just peaks in 21 and then goes down again. So you could broadly work out that as a curve which is about 800 odd and then peaks fairly substantially and then comes down again in terms of.
Okay, so next year we build in about 800 crore and then it gradually goes down.
Yeah, not gradually goes. The split is first year is moderate, second year is peaking, and third year moderate.
And just on the EBITDA side, when I look at your continued operation, and I don't have the numbers for 3Q FY18, but if I adjust for broadly, that salt marketing margins, etc., would be constant. I still see that the profitability has been weaker than, let's say, FY18. So 3Q FY18, 3Q FY19, and 3Q FY20 compare. So I think the international businesses continue to remain lower than what they were in FY18 level. So do you expect the profitability? I understand that Africa has been under pressure, but barring that TCN, etc., do you expect the profitability to improve there from these levels?
I think most places been almost flat. I just haven't seen that any major movement to report.
Okay. No, I was comparing 18 because 19 you had almost 23-24% decline on EBITDA. So this was a very reasonably weak quarter, I think, in the base quarter. So I was just adjusting those.
4% decline. What are you reading? Can you give your numbers? Where are you reading these numbers?
No, I am reading it from the last year number, not this quarter number. So I'm comparing base. I'm not comparing
Last year's EBITDA.
Last year's EBITDA.
Last year's Africa EBITDA.
No, not Africa EBITDA. I'm looking at the overall EBITDA, which
if you look at last year overall EBIT, if you look at EBIT is declared in the results, it's 283 for basic chemistry products. It's 327 now. So you have to.
Okay, I'll
send a separate note through if you've got a question. We'll see if we can answer.
Okay.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yeah, hi sir. So my question is regarding the Tata Chemical Consumer business. So is this any integration cost in this quarter? And how was the A&P expense compared to Q2 FY20?
A&P, advertisement and advertisement. Okay. Sorry, can you repeat before A&P expense? What was the first question you asked?
I'm talking about we have an integration cost in Q2 FY20. So is there any expense this quarter for consumer business?
No.
Okay.
No.
And how is the trend of the advertisement and promotion cost in Q3 FY20 compared to Q2 FY20?
I think that is fairly managed by the business, but I think maybe if I were to state what it was slightly tad lower than the previous quarter.
Okay. So overall, we have seen a significant improvement in margin as well as the absolute growth, 43%. So what was the key reason for that?
1 minute, just hold on. In salt, he's asking what the key reason. The same quarter last year, there was salt pricing. There's a shift in the pricing between that period as well as the volume increase. There's about 20% volume growth, and then there's a price increase on top of that.
Yeah. So you are talking about this quarter volume growth of 20%?
I'm comparing it to quarter of last year, same quarter last year, and these are the numbers, right? 40. So the combined effect of both volume and price is about 20% broadly.
Okay, so we have a 13% top line growth YOY and EBITDA growth of 43%. So is all because of operating leverage or any other cost is lower compared to previous year?
Cost is lower. The energy costs are lower. That certainly has gone in, but I think it's not the big driver. The driver is fundamentally volume and pricing.
Okay. And talking about the India basic chemistry business, we have seen a improvement in margin. So apart from lower fuel cost, any other cost is lower?
It's mainly the energy again coming through and some operating efficiencies.
Okay. And the FY20 capex you have talked 800 crore?
Overall, yeah, we expect that to be the number.
Okay. Thank you so much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Sir, firstly, the benefits of the lower energy prices will accrue going forward or has already started affecting in the numbers? The lower coal prices I'm referring to.
See, energy prices, we do expect that they will remain benign. I think if you just read the headline, Because the crude oil prices are impacting Magadi, Saudi Arabia has cut production of crude oil by 1 million barrels. So I think the oil producers are cutting back. The bigger issue is not the energy price. We are taking stock of what may be the impact on the demand side because of coronavirus, and I mentioned there is a known unknown. So we will work our way through that. As of now, we haven't seen any major impact, but if that happens, that is a bigger issue rather than the lower energy, which we continue to enjoy.
And sir, domestically, sir, we are feeling the punch of inventory levels at higher levels than what it usually used to be. So what is currently the inventory levels in the system, if you could, for the industry as a whole, and what factors are contributing to it, and are you seeing, sir, any decline in the same? Because fourth quarter is generally the best quarter for the industry, and we are 1/3 into it. So what is your understanding of the environment for soda ash now?
So I think the environment for soda ash moving forward, at least for the next quarter or two, given the changes in trade flows occasioned by increased availability out of Turkey, is likely to be about the same as we are seeing today. On top of that, there's the China effect, which I think a lot of people are trying to figure out how that will play out. It's a little early to tell. I'm sure it will have some effect, but in what direction, both domestically and in the international market, is a little difficult to predict at this point in time. So I think over the next 2 quarters, you'll probably see performance in the market in terms of demand-supply dynamics being about the same as they are today.
Yeah, just to elaborate on the Chinese situation, one way to look at it is because those supplies may not come to market, there could be opportunity for non-Chinese producers. That is one way to look at it. But I think as Chinese supplies don't come in many of the consuming industries, including electronics or auto, many of the parts do come in from. Whether they can keep up their production is a question mark which we haven't fully understood, and I think that needs to be factored in. So, which is why I think on one side, the supply side benefits of Chinese situation may be positive. The demand side issue coming out of China, we don't know as yet. So, we don't want to state anything except exercise caution on this one. So, we are moving cautiously on this issue.
Okay. So lastly, sir, on the budget, sir, wherein the DDT has been abolished and Tata Group in particular has been very liberal in rewarding shareholders to very good payout in the form of dividend. But now the same will be taxed in the hands of the receiver, and Tata Trust and all being in some many cases being the largest shareholder. I know that it is not easier within 48 hours to come up with a conclusion, but there has to be some rethinking in terms of how dividend distribution works out now. In terms of the higher tax incident, the recipient now.
See, I think we have a policy already put out in the website, the dividend distribution policy. We will continue to be guided by that. The board has taken note of the changes in the policy framework, and they will work their way through that.
Thank you, Mr. Kapoor. Request to join back the question queue as we have follow-up questions waiting. Thank you. The next question is from the line of Dhavan Shah from ICICI. Please go ahead.
Yeah, thanks for the opportunity. So I have one question on the segmental numbers. If I go to the result note on the page number 8, so there is some asterisk mark in the basic chemical segment wherein the inter-segment revenue of around 229 odd crore goes to the consumer business. So is that related to the salt?
It's mostly salt, yes.
And should we account this, I mean, around 900 odd crores number even post the demerger of this consumer business in the Tata Chem number overall based on the transfer pricing?
Which 900 crore you're talking about?
like around the inter-segment revenue full year FY19 number was around 887 crore, and this 9 month is also almost the same number on YY basis. So
yeah, I think the salt revenue would continue to accrue and it would come in TC again.
So this 900 odd crore, can you share the segmental EBIT number for this the inter-segment sales?
No, I think that is part of the basic industry products. It's lying there.
Yeah, but the salt, this 229 odd crore revenue is coming from salt. So can you share the EBIT which is levied, which is on this salt business?
So the number is 3,000 crores is the total revenue, of which 890 or 900 is salt, and the total EBIT of everything put is 762, right? Here.
That's correct. But, if I look at the quarterly numbers, the basic chemical quarterly segmental revenue for this quarter was around 2,006 crore, out of which it is mentioned that 229 odd crore is for the consumer business. So it is for the salt business. So similarly, the segmental EBIT for basic chemical is 327 odd crore. So can you share the portion of the consumer business segmental EBIT out of this?
We have a disclosure now as a segment which we have done. We have clarified the intersegmental number. You would also see in the annual report the production numbers of salt as they would be. We have actually disclosed the full production expansion of salt. I think that is all we would do. Beyond that, I think we are not in a position to disclose.
Okay. And secondly, about the Europe business. So I just wanted to understand what could be the maximum sales or the peak sales of the soda bicarb in the European market, TC? Because I think our strategy was to reduce the soda ash volume over there and to increase the soda bicarb business. So if you can share some more thoughts on that.
You want to explain it, or maybe we do it next time? I think we'll come back with specifics on that.
It's constrained by market as far as bicarb is concerned.
So what Zarir has said is that there's no constraint on the market side, but we will come back with the broad outline of that in the next part of presentation.
Thank you. Mr. Shah, request to join the question queue for any follow-ups. We move to the next question. That is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Good evening, John. Good evening, Mr. Mukundan. Thank you very much. See, there is this entry regarding the booking of around 707 crores by way of the difference between the consideration paid and the book value of the non-controlling interest of your U.S. acquisition. So is this on the consolidated balance sheet or is it on the standalone balance sheet?
It's on the console balance sheet. We'll mature the balance sheet in March.
So that means you have booked some capital gains on that sale?
It's basically a transfer from no controlling interest to retained earnings. So it doesn't go through the P&L. It's just a balance sheet.
Okay. So it is not a cash flow item. It's just a...
No. It just relates to when we've taken over the remaining 25% of our operation in North America. It's a true-up of the various balances. Okay. Eliminating non-controlling interest, and the difference goes to price paid and non-controlling interest value is reported as a retained earnings.
Okay, just an accounting entry. Okay, fine. And the second question which I have is on the standalone specialty segment. Now, we have seen persistent losses at the EBIT level in this business, although you have a substantial investment there. If you look at the assets, about 539 crores, net of the liabilities, so an equity investment of around 500 odd crores. So, what is the reason behind these persistent losses and the low, revenues from the specialties business?
The investment has just happened now. I just know, I think the plant is not yet commissioned. It's in it is just in the process of getting commissioned. So I think that's a reflection of what's really playing out in the numbers there.
No, I understand that what you're saying about the future investment, but on the existing.
No, these are existing. This is accounted fully. I think the capex of of Nellore is accounted, and also the Cuddalore investment is accounted in this. So these are all, I think 250 odd for Nellore and 120 odd for Kadalur is part of this. And they will start showing results. But I think it's in the process of getting commissioned.
Yeah, I understand that. So I just wanted to get some sense in terms of the reasons behind the persistent EBIT losses.
It's not persistent. I think I just would not want to use the word persistent.
You have seen that over the last several quarters, Mr. Mukundan. I just wanted to understand if there is any operational issue, or is it just a question of not having the...
There is. I think the point is the plant is not yet operational. Okay. It's been just invested. It's like, you buy a vehicle, it is not running, it will run. Okay. The point is it's a new vehicle, that's all.
Okay. Fair enough. Thank you very much.
Thank you. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, good evening, sir. Thank you for taking my question. Basic questions around the consumer business only. So you mentioned that the salt volumes have grown around 3% in third quarter and YTD. Just wanted to understand what would be the value growth in the salt business? Just the salt. 3Q and YTD both.
So we give you the volume information, but we never disclose segmental salt revenue by itself. Salt is the biggest part of that consumer products business unit. So you can probably work out from there.
Okay, no issues. Sir, one more thing about the consumer business. So there is a sharp increase in the EBIT margins, and if I look further, this is basically because the base quarter margin was exceptionally low. So just wanted to understand, was there a one-off there, or is this a seasonal nature of the business? The third quarter margins are that low?
No, it was more to do, as I said on the last call in the quarter two results, it was more to do with allocation of some fixed costs related not to the transaction, yeah, and also things like rent and property costs that the consumer product business will be accepting going forward. That's all.
Okay, so this was a one-off in the third quarter FY19.
No. Quarter two was depressed because of certain costs being absorbed in that quarter.
Okay, sir, what I was asking was about third quarter FY19. So if I do a EBIT calculation, this comes to around a 12.5% EBIT margin, and this was coming down from around a 19% margin from the previous quarter. So just wanted to understand in the third Q FY19, what was the issue?
No issue in FY19.
Okay, so the margin that has gone up this quarter, this is an organic improvement.
What we're saying is that quarter two this year had other costs coming through there. Quarter three result against quarter three last year is really a result of, as Mukundan said earlier, volume increase of about 17,000 tonnes, a price increase, some control of fixed cost, and also benefiting from input cost, energy cost reduction.
Got it, sir. I get that. So, sir, last and final question on this. So, the EBIT margin profile of this business, this used to be around 19% if I look at FY19, and this is now today trending at around 15%. So, could you just give some color as to why this margin profile is lower this year?
Yeah, I mean, I'm not sure your numbers. I'm not going to quote against your numbers, but there's nothing. But what you're seeing in the last couple of quarters is, as a result of the demerger, some corporate costs that are directly attributable to the products business unit have been attached to those numbers, and that's all you're seeing. And there's nothing different happening.
Got it, sir. So as this is demerged and merged back into TGBL, it would probably again trend at around 17-18%. Would that be a fair assumption?
That's your numbers and not mine.
Okay, fair enough. Thank you, sir. Thanks. That's all from me.
Thank you. The next question is on the line of Chaitanya Shah from Aditya Corporation. Please go ahead.
Hello, good evening. So my question is regarding the acquisition that we've done, the 25% acquisition. Firstly, I have three questions regarding this acquisition. Firstly, the reason for this acquisition. Secondly, if you see the 25% stake is valued at around 195 million, so the entire US entity would be valued at around 800 million. So I wanted to know what is the basis of this valuation, and thirdly, what will be the yearly impact on P&L that would be transferred from the minority interest to the operations of the company shareholders?
We got opportunity to fill out our acquisition of North America at a fair negotiated price. The other party has been public about them not wanting to own assets that were not core to their operation. It's core to us. We are sort of manufacturer in North America, and it gives us much more management control and much more efficiency in operating that business. The value was negotiated over a period of time, and both parties are happy with the value that came out of there.
It is going to be positive in terms of EPS because while the minority interest will go because it's a fully leveraged acquisition, you're going to have debt which will come on, which will cost us, but the net of the debt will be an improvement in the margin, the bottom line.
Okay, so would you be saying that you would be fairly comfortable with the 800 million valuation that you're giving to the US unit?
No, don't forget, I'm never comfortable with that. The acquisition was for a 25% minority stake,
so
with no management control. Yeah. So that's where the valuation was based upon, yeah?
It's at a discount to the numbers, what would be otherwise. That's because it was a minority stake, it was not a controlling stake. Controlling stake will come at a premium.
Okay, all right. And sir, I heard that you gave a roadmap for investments totaling 3,400 crores. Could you just let me know once again, this would be over what period? I mean, how many years this will stretch about how many years? And in your previous presentations, you mentioned that the ROC that you're expecting from these investments is around 18 to 20%. So that would be around 600 crores on an EBIT basis. So when do you expect to realize this EBIT? Like in the next 3 to 5 years? If you could just give me a timeline on that.
So 2,600 is going to go on the ground in next 2 years, and the capacity schedule has been highlighted already by John in a presentation, investor presentation. The 500 crores has been already invested on the ground. Part of it, about 400 has been invested on the ground between Nellore and Kadalur. So that tells you the substantial pieces. The balance piece, Rallis would be investing. I think they have invested close to 150 odd crores already, and they are on their way to invest the balance over a period of time, and that is over a longer period of time, so over 4 to 5 years. And the energy business investment is today just in the land, and if you add the land development activities, it's about 90 odd crores, 90 to 95 odd crores. But real investment in the plant and machinery will come back to you as soon as we have all the agreements with the technology partner and we move forward on that.
All right, so I'm asking, especially in the energy business, because in the demerger presentation you mentioned the target on the energy business to have a 2,500 crores of revenue in the next 5 years. So I just wanted to understand how are we on track to do that, or if there's anything that you could share with me on that?
Yeah, I think our investment decision and support to that is dependent on 2 factors. One is we are ready to move forward, but it also depends on the space at which the electric vehicle market in India develops. Optimistic players are projecting a very high number. We will see how the reality plays out. As you know, the auto sector is already in a bit of a difficult spot, and we are working with all the automakers to make sure that we can support them. But it is a transition which, while our ambition is to go ahead and initial phase build close to 300 to half a gigawatt unit and finally build at least a 2 gigawatt unit in about 2 to 3 years time. This is entirely dependent on the state of the auto market. So I don't want to commit a specific timeline on that because we don't want to be too much ahead of the curve.
Thank you, Mr. Shah. Request you to join the question queue for any follow-ups. We'll move to the next question. That is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir. Sir, of the 2,600 crore that you mentioned, how much of that would be spent in expanding this soda ash domestic business by 200K?
We had given the split some time back, but I think the total number is what we would stress, because it's a total package. It includes the investment in utilities which are shared across, and investment in caustic, investment in salt, investment in soda ash, and investment in cement. So it's an overall number, and
Understood. And secondly, since you mentioned 18-20% ROC, so would that be visible in terms of the numbers that we will start delivering immediately, or this is more like a IRR over a longer term where ROC is increased if the prices of these commodities increase later on?
Well, as soon as they get on to production, I think many of them would start showing returns because they've phased over 2 to 3 steps. So we don't anticipate a huge lag, but there will be some lag, but it is not a major lag in our view. And these are capacities which are, let's say, equal to debottlenecking capacities in a lot of cases. A substantial investment is for the salt expansion, which I think the market is still fairly strong.
Understood, sir. And finally, if I may check one, we were talking about coronavirus impact. Now, there are 3 moving legs to it. One is, of course, the demand slowdown from the industry which are consuming soda ash globally as well as maybe in India to some extent. Then there is a impact of removal of capacity which is coming out of Chinese areas in terms of both imports to India as well as imports to other countries. And third is the decline in commodity prices, which are raw material to us, like energy prices and coke, etc. So, net, how are we thinking about it in case this persists for a while? Would we be better off, or would we be worse off? Any qualitative, color if you can throw. I know that quantitative would be impossible at this stage.
All I can say as the world comes out of this event, many buyers around the world would want an alternate to Chinese supply. That will be a psychological impact of this. Beyond that, I don't think we should attribute anything more. A lot will depend on the quality and consistency of how suppliers are. I think the short-term issue entirely depends on how long this crisis persists and how it will play out. While there are people who are very bullish on supplies which are outside of China, there are people equally negative on what the impact is likely to be. I do think that we should have a serious consideration of the demand side problems this is going to create. But hopefully this is a short-lived issue. If it is a short-lived issue, I think it is a benefit for all countries, so people would want diversifying their supply sources, which is a positive for Indian supply base.
And like in India, where most of the supplies are based out of Gujarat, is Wuhan and those areas which have been primarily impacted, are Chinese capacities concentrated in those regions, or if you can give me some color on that, the way geographically in China?
The material which comes to India is mostly coming out of coastal plants. They are not in Wuhan. They are very, very, very far out. I think the impact is about the various supply chain knock-on effects which are happening on because of the issue there. I think there is a general stoppage of travel, general stoppage of materials. So I think those are things which are creating issues. But the soda ash production is mostly coast-based.
Thank you. The next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
My question is pertaining to slide number 16. I'm not able to understand on statement of profit and loss continuing operations for the quarter ended December 2019. Previous year profit before tax is 242. Current year it is 297. and profit after tax is 180 for previous year, and current year it is 172. So, how is it that profit before tax is higher in current year and PAT is lower in current year? I mean, is there any items between them?
Yeah, this is mainly the profits coming from our joint ventures. This is what we call the profit which is accounted for.
You can't add across. Yeah, you can't add across from this piece. There are a number of consolidating entries, some of our international operations as well as joint venture partners as well. They will have income, sometimes taxable, sometimes not taxable. And the tax rates will vary, so the mix of tax rates will vary across the countries as well.
Okay, that answers my question. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thank you all. I think, firstly, I must say that we have managed to navigate the last quarter despite certain challenges, and also we are continuing to remain focused on navigating the quarters ahead despite the external challenges which are seeming to be a little bit more onerous than before, especially with the news coming out of China. Having said that, we remain focused on our investment plan and growth plan. We remain optimistic in terms of delivering growth in the basic chemistry business as well as in the specialty business. All these investments would see the light of the day in the next 2 years and propel the company's performance forward. In the meantime, we are focused in the immediate term in ensuring the demerger of the consumer business and its merger with TGBL happens in all earnest and a very smooth manner, which we hope to report back to you by the end of next quarter. With this, I'd like to say that we continue to remain focused on our strategy of building a very focused chemicals and chemistry-based business. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Tata Chemicals Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines.